Welcome back to the Malaysia Money Matters show. It's February 11th, 2025, and we're diving into some interesting Malaysian company updates today.
Absolutely. And we've also got some major international news that's shaking things up in the financial world. Should be an interesting deep dive.
Let's jump right in with those Malaysian company updates. First up, Seng Industries. You know, the ones who make those Cap Ping Pong crackers. Well, they're reporting record earnings for the fourth quarter.
Their new oven seems to have really boosted production, leading to those higher sales figures. But there's a bit of a catch.
Rising costs.
Exactly. Rising raw material costs are a concern. Palm oil, especially, is a key ingredient for them, and the price has been going up. And then there's the possibility of those tariffs, the ones we'll talk about a bit later, could add another layer of complexity to their costs.
So enjoy those Cap Ping Pong crackers while you can, because they might get a bit pricier down the line.
It's a good reminder that strong earnings don't always tell the whole story, right? You got to look at the bigger picture and those underlying factors that might be at play.
Now, shifting gears to CelcomDigi, analysts are predicting pretty steady earnings for this telco giant. Seems like their merger is paying off in terms of cost savings, and their subscriber numbers have stabilized.
They're also making good progress on integrating their network, aiming to have it fully done by mid-2025, which is key as they, try to navigate that whole 5G landscape.
5G is definitely the name of the game these days. Speaking of making a splash, Colform Group, the steel product maker, had a great debut on the ACE market, an 11% jump, despite everyone being a bit nervous about those U.S. steel tariffs.
They're really focused on expanding within Malaysia and maybe even Indonesia. It's a bold move for sure, especially with all the global uncertainty around the steel industry, but they seem confident they can make it work.
Now, for a company that's not shying away from those U.S. tariffs, we have Pentec Global. They actually argue that the tariffs, if applied fairly to everyone, could create a more level playing field.
Their logic is that the tariffs might hit their competitors harder, especially those relying on cheaper steel imports. They believe in their product quality and think they can compete globally, even with the tariffs in place. They're even eyeing expansion into North Africa and South America, so.
Talk about a confident outlook. Meanwhile, Diffex just secured a nice $18.5 million contract for data center equipment systems.
Shows the digital infrastructure sector is still booming, right? As more businesses and people rely on digital services, the demand for data storage and processing keeps going up. Good news for companies like Diffex.
And for those who enjoy a good view, MGB, the construction and property developer, won a RM194.72 million project to build a 22-story service department in Cameron Highlands. Their order book is now at a pretty impressive RM1.27 billion.
The property market is still going strong, it seems, especially in tourist spots like Cameron Highlands. This project could be a good indicator of how the construction sector's doing overall, which is a big part of Malaysia's economy.
Not all news is good news, though. PMC Life Sciences reported a loss for the second quarter. They were hit hard by some terminated customer contracts stemming from that dispute with their former CEO.
Yeah, that's a tough situation. Shows how important strong leadership and good corporate governance are for a company, They're now focused on diversifying their customer base and growing their hospital operations, so hopefully they can recover.
On a brighter note, Maybank snagged a spot on the list of the world's 500 most valuable brands. They also received a bunch of awards for their work in sustainable financing.
It's great to see companies putting effort into ESG initiatives, right? It's not just about profits anymore. Maybank's success shows that doing good can also be good for business.
And Maiden, the halal retail chain, is aiming for a pretty ambitious RM 3.2 billion in sales this year. They're banking on government programs and focusing on making things easier for customers who shop online.
Smart move, considering the rise of e-commerce, right? Maiden's success shows how resilient the retail sector can be when it adapts to changing consumer behavior, and it's a positive sign for government initiatives aimed at boosting the economy.
Now, for another company looking to grow, there's Insights Analytics, a Sarawak-based water technology firm. They filed for an IPO on the ACE market.
They're hoping to raise funds for expansion and to boost their working capital, which indicates they see good potential in the water management sector. This move also aligns with the growing focus on sustainability, right? Efficient use of resources and all that. Definitely a trend to keep an eye on.
And in some good news for smaller businesses, SME Bank approved a hefty RM 3.6 billion in financing in the last fiscal year. They're focused on supporting micro, small, and medium enterprises, especially in key areas like Bumi Pertera businesses, technology, halal, and tourism.
That kind of support for MSMEs is essential for balanced economic growth, right? It's all about giving smaller businesses a chance to thrive and contribute to the overall economy.
Finally, let's talk about public bank. Analysts believe they can actually increase their dividend payout, despite a one-off goodwill impairment related to their Hong Kong unit.
To be clear, goodwill impairment basically means the value of an asset they acquired through a merger or acquisition has gone down. But even with this setback, the bank's overall financial performance is expected to be strong enough for them to maintain or even increase their dividend payout.
That's good news for investors, especially since there's also buzz about LPI Capital potentially selling their stake in public bank, which could mean a nice special dividend.
Definitely something to watch out for. It seems Public Bank is doing well despite some challenges, and they're committed to rewarding their shareholders.
Okay, we've covered a lot of ground with those Malaysian company updates, lots of interesting developments and strategies at play.
It's a dynamic landscape, that's for sure. Now let's switch gears and look at what's happening on the international stage. Some big news that's got everyone talking. The big news, of course, is President Trump's announcement of a 25% tariff on all steel and aluminum imports coming into the U.S.
Yeah, that was a bombshell. Markets are definitely feeling the shock waves, and there's a lot of talk about a potential global trade war. The U.S. dollar is up, commodity-linked currencies are down, it's a bit of a mess. What does this mean for Malaysia, though?
Well, it's a complex situation, but let's break it down a bit. First off, it's important to remember that Malaysia, like a lot of countries, is deeply integrated into those global supply chains. So even though the tariffs are specifically targeting other countries, they can have these ripple effects that spread across the whole world.
Okay, so how could this impact Malaysian businesses directly?
Well, for Malaysian companies exporting steel, it could make it harder for them to get their products into the U.S. market, right? A 25% tariff makes their steel more expensive compared to what's produced in the U.S.
And it's not just about the steel itself, right? We were talking earlier about how some Malaysian companies rely on imported steel and aluminum for their products.
Exactly. So companies like Seng, the cracker company we discussed earlier, might see their production costs go up if the price of imported steel rises. And those higher costs could eventually get passed on to consumers.
So yeah, not exactly good news for anyone's budget, but it's not just about the direct impact on Malaysian companies. What about the bigger picture? How could this affect the global economy as a whole?
The biggest worry is that this could set off a global trade war. If other countries hit back with their own tariffs, it could create this domino effect, and that could disrupt global trade and hurt economic growth everywhere.
And a global economic slowdown would definitely impact Malaysia, which relies heavily on exports.
Exactly. So while the immediate impact of these tariffs might be limited to certain industries, there's a lot of potential for broader economic consequences that we have to watch out for.
A lot of uncertainty then. So what are other countries saying about these tariffs?
It's been a mixed bag of reactions, really. The EU is pretty unhappy about it. They've said they might retaliate with their own tariffs on U.S. goods. They see it as protectionist and against international trade rules.
What about the UK?
They're being a bit more cautious, saying they need to see the details before they decide how to respond. But they've also expressed concerns that these tariffs could harm their steel industry, especially those high-end steel exports going to the U.S., which is their second biggest market.
So a lot of diplomatic back and forth happening. Sounds like everyone's trying to figure out their next move.
Absolutely, and it'll be interesting to see how this plays out over the coming weeks and months. But, amidst all this uncertainty and tension, there's one thing that seems to be doing quite well.
Gold.
Gold. It's surged to record highs as investors look for a safe haven in all this turmoil. It's that classic flight to safety scenario. When things get uncertain, investors tend to flock to assets like gold, which are seen as a store of value, a hedge against economic trouble.
So while the tariffs might be creating winners and losers in different sectors, gold seems to be coming out on top, at least for now.
Exactly. It's a good indicator of how the market's feeling. When gold is doing well, it often reflects a certain level of fear and anxiety among investors.
Makes sense. So besides this whole tariff drama, what other global developments should we be paying attention to?
Well, there's some news coming out of China that might not be making as many headlines, but could have big implications down the line.
Oh, what's happening in China?
Marriages in China hit a record low last year, and this is a pretty big deal because it adds to China's demographic problems, which have been brewing for a while now.
You're talking about China's shrinking workforce and aging population, right?
Exactly. Fewer marriages mean fewer babies, which means even fewer young people entering the workforce in the future. And this demographic shift has some serious implications for the Chinese economy as a whole.
It could lead to slower economic growth, right? Less
Mm.
consumer spending, potential labor shortages.
Exactly. And it could also put a strain on their social security system as the ratio of working age people to retirees keeps shrinking.
So this news about marriage rates, it might seem like a small thing, but it actually points to a much bigger issue that could have a significant impact on the global economy in the long run.
Absolutely. It's a reminder that these demographic trends, they might seem slow-moving, but they can have powerful and wide-reaching consequences.
Now, for something a bit more tech-focused, there's this Chinese AI startup, DeepSeek, that's been making waves. They claim to have developed a powerful AI model for a fraction of the cost of its U.S. competitors.
Yeah, DeepSeek has definitely shaken things up in the AI world. Their claims have sparked a lot of excitement about the potential for more affordable and accessible AI tech.
But not everyone's convinced, right? There have been some accusations from the South Korean spy agency about DeepSeek collecting too much personal data, and Google's AI chief has questioned their claims about the cost, suggesting they might be exaggerating a bit.
Yeah, it's understandable that there's some skepticism. The AI field is incredibly competitive, and there's a lot at stake, both commercially and geopolitically. Whoever wins this race to develop and use advanced AI will have a lot of economic and technological power.
It's fascinating to see how this story unfolds. On one hand, it shows how fast AI is developing, but it also raises important questions about ethics, privacy, and the potential risks of these powerful new technologies.
It definitely does. It's a reminder that as technology advances, we also have to think carefully about the ethical and societal implications.
So we've covered a lot of ground today, from company news to global trade tensions to the future of AI. It's been quite a ride.
It has. But before we get to the most exciting news of the day, let's take a quick look at the economic outlook for Malaysia, considering everything we've discussed.
Okay, what's the latest on the Malaysian economy?
Well, the Department of Statistics Malaysia is reporting that construction activity in Malaysia grew by a solid 20.2% last year, reaching a total value of RM 158.8 billion, which is a positive sign for the economy overall.
That's good news. What about the job market? Any positive developments there?
Yes, actually. The unemployment rate dropped to 3.1% in December, which is a near-decade low. So that suggests the job market is healthy, which could lead to more economic growth in the coming months.
So far, so good. But are there any potential challenges we should be aware of?
Well, some economists are starting to warn about increasing risks to Malaysia's industrial production. And those risks mainly stem from those U.S. trade protectionist policies we talked about earlier.
Right, makes sense. Malaysia's industrial sector, especially electronics, is so intertwined with global value chains. Any disruption to those chains, especially if it involves China, could have a negative impact on the country's industrial output.
Exactly. It just shows that even though Malaysia has a lot of domestic strengths, it's not immune to those global economic headwinds.
However, there is some good news as well. Tourism and household spending in Malaysia are both doing quite well, which could help offset any potential slowdowns in the industrial sector.
It really highlights how resilient the Malaysian economy is. Strong domestic demand can act as a buffer against those external shocks and keep the economy growing.
And even with the global challenges, Malaysia is still aiming for trade growth in 2025, with a goal of keeping trade levels above RM2 trillion.
It shows the government's commitment to expanding trade and attracting foreign investment, even in this tricky global environment.
So it's a bit of a mixed bag for the Malaysian economy. Some positive indicators, but also some potential challenges. Bit of a balancing act.
Exactly. It'll be interesting to see how all these different factors play out over the next few months. And that's why it's so important to understand what's happening, how it all connects and how it might impact your finances.
Which is exactly why we do this deep dive, trying to break it all down and give our listeners the insights they need to navigate this crazy world of finance. So as we wrap up today's episode, what are the key things our listeners should take away?
Stay informed, for one. The world is constantly changing, so keep up with the news that could affect your finances.
Think critically, too. Don't just believe everything you read. Do your own research, ask questions, and form your own opinion.
And don't forget about diversification. Spread those risks. Invest in a variety of things.
Great advice. And for those who want to dive even deeper into these topics, make sure you subscribe to the Malaysia Money Matters podcast.
We'll be back with another deep dive into the world of finance and economics.
Until then, stay informed, stay invested, and most importantly, stay curious.
See you next time.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.